Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, July 12, 2024. Yesterday, the Consumer Price Index report for the month of June confirmed what the bond market has been telling us for weeks. Inflation is coming down fast enough for the Fed to seriously consider lowering its policy rate when it reconvenes at the end of this month. Now, I'm showing you here the press release from that report yesterday. And in June, the CPI for all items, or headline CPI, fell 0.1%. Over the past 12 months, it increased by 3.0%. Now, excluding food and energy, or what's known as core CPI, it rose 0.1% last month and grew 3.3% during the past year. All those numbers were lower than expected by most analysts on Wall Street. Now, here's the report, and I'll just point out over here, all items less food and energy, and you see that the negative 0.1. If you look to the left at the previous months, you can see that number has been trending down, and the headline number, all items, also trending down really since March. So there's a clear trend in place now. Now, initially, the stock market rose on that news. The S&P 500 index hit a new all-time high shortly after the exchanges opened for trading. However, it quickly reversed direction and finished the day lower than it opened. That response was unexpected since Wall Street had been anticipating a cut in interest rates since the start of this year. So here's the S&P 500 year to date. Now I'm just going to look at the last 5 days, which is, you can see here, that's July 11th, yesterday. When the report comes out, it peaks at 10 a.m. and then quickly dives down. But today was kind of unexpected. We got a report from the Producer Price Index report for June, which came in hotter than expected. And the PPI is considered a leading indicator for inflation since higher producer prices ultimately get passed on to consumers. Nevertheless, the S&P 5 index rose today on that news to fully recoup all of yesterday's decline. So here's that PPI report. And again, let's go to this bottom right corner. You can see that the change in final demand, less food and energy, core PPI, still above 3%, even though CPI is coming down. So there's a little bit of a concern that in a few months, this may force CPI a little higher. Now, for the past couple of weeks, I've compared the performance of the cap-weighted S&P 500 index to the equal-weight index of the same stocks to see if Wall Street's bullishness extends beyond the mega-cap tech companies that dominate its performance. Yesterday, the cap-weighted index fell, while the equal-weight index rose. So here is the RSP, that's its symbol. It's the Invesco S&P 500 equal-weight ETF. So all 500 companies that comprise the index get an equal weight, or roughly 2%. Sometimes there's actually, believe it or not, one or two more stocks in there because a company will have more than one stock trading. Anyway, you look over here year to date, and until literally that CPI report came out, the equal weight index of the S&P 500 had gone nowhere for almost 4 months. But then just look at the last 2 days and you see this big spike up. So obviously, while Wall Street was maybe not adding to their mega cap tech stock positions that dominate the index, they were clearly adding money to some of the smaller large cap stocks. Now, at the same time, the S&P 500 mid cap index and small cap index also rose yesterday and were up today. That is good news since it implies that Wall Street feels confident enough about the future direction of the economy to start buying smaller companies in other sectors. So here's the ETF version of the S&P mid cap. And again, until 2 days ago, it had also gone nowhere for about 4 months. But then look at the huge spike just over the last 2 days. And if we look at the small cap index, almost an identical chart. So huge jump in small caps too. As I've said all along, there are good businesses trading at relatively low valuations that have been shunned by Wall Street while the future direction of the Fed's monetary policy was unclear. But now that the odds of a rate hike are close to zero, a lot of mid-cap and small-cap stocks are back in play, as shown in the chart that I've included in this article. That's exciting news for individual investors who do not have the financial resources to compete with professional portfolio managers. They have been concentrating their money in the Magnificent 7 mega-cap tech stocks that account for 30% of the performance of the cap-weighted S&P 500 index, driving those share prices up to unsustainable levels. But now, they must compete with you. Not just for the other 493 S&P companies that comprise that index, but for the 400 companies in the mid-cap index and 600 companies in the small-cap index. The playing field just got a lot bigger, and nobody has an unfair advantage anymore. That's this week's PF Update, and I look forward to talking to you in another week. Thank you.